The broadcast is now starting. All attendees are in listen-only mode.
Like this. Okay. Audio is good. I see visual. All right. Today is October 31st. It's about 5 to 1. Usually I kick started off a little early just to get some of the things that I have to talk about before I present. The game plan this afternoon is this. Number one, I'm going to go over the trading setup, the same setup that you see inside the training room. Same one that Michael's using, same platform that Michael's using. The platform that I'm featuring is DtPro. That is the platform that I support. Okay, same one Michael and Dwayne are using. Okay, the game plan is to give the guys that are brand spanking new a good syllabus to lean on. Okay, I call it a cheat sheet. All right, I'm going to go over the buzzwords and the setups. So when you're in the training room on day 1 or 2 or 3, you can absorb what's going on. So at the end of the trial, when you get an offering from CFRN, you can make you can decide, whether you want to pursue this or not. Okay, I think you'll be more educated on whether you want to do it. Okay, so that's my game plan. All right, and this will allow you to ask questions. See if you really want to do this, because there's, this is something that might not be for everybody. Okay, remember what they're doing in the room is they're taking a little bite out of the market, a little piece out of the trend. All right, they're not trying to predict the high or the low. They are trying to take a piece out of the middle. So that's what you're signing up for. Okay, so again, we're going to go over the trade setup in slow motion. So the new guys, you're prepared on day 1 or day 2. Then what we're going to do is we're going to hop inside a live market, and we're going to try to identify the same setups that we just went over. We're going to trade them. I'm going to go inside the DOM. That's this, if you're brand new, that's this tower here. This is where we do our buying. And in the red here, this is where we do all our selling. Okay, so you'll see me go inside, place an order to get long. You'll see me place a stop. Or you might, if we get a short setup, we might, I'll show you how to get short with the stop behind it. So not only am I going to show you how to enter the trade, but I'm also going to show you how to manage the trade based on the rules, and then when to get out. Okay, so that's the game plan. In addition to that, I'm going to go over some of the common traps that people kind of fall into. Over the years, what I've seen, looking at screenshots of people's platforms, if they are struggling or spinning their wheels, there's some common things or pitfalls that people kind of fall into. So I'm going to take a few of those and point those out to guys. And if you feel like you're falling into those same traps, I'll give you some solutions to those. Okay, they're really simple stuff, but I think if you again absorb what's going on, maybe some of those losers or break-evens now become winners, or no trades at all. So that's what we'll attempt to do. All right. Existing CFRN members, hang out. You guys can ask questions. If you're kind of on the newer side of the membership side of it, this is a good chance for you to ask questions. Okay, I'm going to go over, again, everything in slow motion. And if you ask questions, there's a little question box on your GoToWebinar little thing there. And I'll see the questions and I'll answer them, okay? So the idea for you guys really is, for existing members, is this will give you a chance to get a little bit more screen time, getting in front of the markets, learning the personalities of the markets that we're trading, okay? And that time spent in front of the screens will be part of your education, okay? So learning, the markets that we are trading is important. I know the story that I always throw at people and tell people is, over the years, I'd watched Michael trade the mini Russell, and he made it look so easy, all right? And, I've been doing this for almost 25 years, so I'm like, man, if he can do it, I can do this, all right? Sure as heck, I pull up a mini Russell Dom. I just couldn't do it, okay? And the reason is the market the personality of it, I didn't know it. It was moving too fast. It was hopping. It was skipping. It was doing all these things that I wasn't familiar with. So I had an itchy trigger finger. And so from that point on, I had to drop the Dom. Okay, I could not trade the mini Russell. And the reason is, just didn't know the personality of it. Okay, so I think, just hanging out, being in front of the screens and watching the action, there's some added value to that. So don't discount it. But again, I think if you are going to be in front of the screens and you are watching things, if you are in demo mode, I think you have to push buttons. Okay, you just can't watch the screens and just pretend that you're putting trades on and off. That's not going to cut it. Okay, I've run into people that fit into that category, and it's a losing proposition. You have to physically go in and push buttons. Okay, so just from experience, just from people that I've talked to, remember, I've been in the room from day one, so I've kind of seen it all. Okay, I've talked to all. My wife said you're handsome. You want her? So, anyways, I don't know where that came from, Bart. Anyways, that was a good start. So, I'm sorry I'm laughing. Bart made a comment in the box, and I just started laughing. So, all right, let me get my head on straight. So the first thing I have to do is go over the disclaimers. Okay. Now, as I tell the new guys, this is an eyes wide open approach. Okay. And we're going to talk about the setups. We're going to go inside a live environment. We're going to do things in slow motion. The fact that this is an eyes wide open approach, okay, it starts with the disclaimer, which is the risk that's associated with trading futures. Okay. A lot of you get to this point, okay, you're knocking on the door, and you're wondering what's going on, okay? We all get the marketing emails and all the stuff that says, hey, you can do this on your spare time, and you can do this and that, and you can make a living doing this, all the glamorous stuff that comes with these marketing emails. But trading can be risky, okay? Just like stocks, anything, ETFs, all the stuff that you're doing, there's a risk associated with trading, especially futures, because we're talking about a leveraged market, okay? So why am I talking about this? Because if you don't have a trading plan, I did. Even though I had my life. If you don't have a trading plan, if you're not using stop losses, okay, if you're not engaged in the marketplace, if you're not watching your trading account, if you're not in tune what the news reports are, this disclaimer really is going to hit you right smack dab in the gut. Okay, and being around for almost 25 years, I really have seen the good, the bad, and the ugly. So the guys that are brand new, okay, this one is for you. This disclaimer is basically meant for you. My experience with CFRN is that a lot of the guys that are knocking on the door have been in this guy and this guru and this room and that chat room, and they've followed this one. So they're kind of numb to the disclaimer. They've been through the battle. Okay, they've been through the war. Okay, they've lost money through the way. So they already know about this. Okay, it's the new guys that are brand new that get hypnotized by, all the marketing stuff that says they can do great, but they forget about the risks that are associated with it. So the disclaimer is really, it's a warning label. Okay, not a fancy way to start a webinar, but for me, being that this is an eyes wide open approach, I don't mind talking about it because I've been around it. So the good thing is, okay, let me erase that. Let me add this. If you go down the CFRN path, okay, if you ultimately decide, hey, I'm doing this, here are the benefits. One, you have a trading plan. We're going to go over about 4 rules here. So that kind of checks that box. Every trade has an 8-tick stop attached to it. That checks that box. It's going to be on a 4-tick range chart. Okay, so you really have to be engaged in the marketplace. Okay, you're going to be looking at the market under a microscope. Okay, that's what we're looking at right here. Okay, so you really just can't walk away from the screens. Okay, so that checks that box. If you're placing orders and you're using aggressive risk management and you're getting out the rules-based trading, well, you really have to know your trading platform, and you have to be engaged in your trading account. So it checks that box. And the other thing is that CFRN will tell you right off the bat they don't trade at or around news items. Well, you eliminate that risk too. All right. So what I'm saying is, even though that disclaimer is kind of scaring you, okay, it's there. It's meant to scare you, especially if you're new. But you check a lot of the boxes off so you don't become a casualty of the market if you go down the CFRN path. Okay. No, it doesn't eliminate it altogether. Okay. Not everyone's going to make money. Okay. People have different personalities. They don't follow rules. They lack discipline. So no, not everyone does it. Okay, that's why it makes the business hard. But again, it's a warning label that has to be talked about. So that's why I do it. Okay. The funds that you put in a trading account should be funds that you can afford to lose. All right, it's not going to change your lifestyle. Okay, you should be able to pay your bills if you lose. The idea is nobody likes to lose, right? But in the end, something silly does happen. Okay, the funds that you put in that trading account have to be risk capital. Okay, and the one that I have highlighted here is something that was added and is new, is that past performance is not necessarily indicative of future results. Okay, so what's going on in the training room and what I talk about and stuff like that doesn't necessarily mean that's going to be something predictive going forward. Okay, so what might be working now may not work later. Who knows? I don't know. All right, but we are going to go over the rules. Okay, and there's the same set of rules that have been around from day one. Okay, if you notice, this chart hasn't changed since 2012. So Mike took a screenshot of it, and I took it because it was blown up. It was nice and clean, and now I use this every Thursday. So I use this as kind of the model to talk about the setup. Okay, so it's been around. Some other things have evolved along the way, but this one has been around from day one. It's the same one that Michael uses. So honestly, that's the one you should be using. Okay. The next slide basically outlines my relationship with CFRN. No, Dwayne and Michael, CFRN, they don't work for Daniels Trading, and Bert from Daniels Trading doesn't work for CFRN. There is a line in between us. It's a thick line. We don't cross it. Okay. What this just basically says is it's their indicator, their software trading tools. They're the educator. Okay. We have a third-party relationship with them. Okay. In a nutshell, okay, their indicators, that's what you see here, are built inside my platform, which is called DtPro. Okay. My role is I support the platform. If you decide to use the platform, it's the same platform that Michael and Dwayne use. If you decide to use that platform going forward, I support the brokerage. So that means in the end, you would open up a trading account. You would do it through Bert at Daniels Trading. So I would handle that, the execution, the brokerage. support of the platform. If you are trying to download the platform and the indicators during the trial process, raise your hand. Okay, I'll help you with that too. No problem with that. Okay, if it's a hand raise that says, look, I'm kind of confused, what's going on in the room. What is this BB, this green line and this red line? What does this all mean? Okay, that's fair game. All you have to do is raise your hand. So I'm happy to do it. As far as I'm concerned, if you're doing well, then ultimately I'm doing well, right? So that's kind of my thought process on it. Okay, so that's my role. Dwayne and Michael. Michael's in the training room in the morning, so he's doing the training. Dwayne, he's doing the radio in the afternoon. He's doing Logic 247 and the concierge trade alerts and the swing trades. That's his kind of section. And then you have Valerie doing support. So all we have are independent roles. It's just there's some separation between CFRN and myself. So we have to disclose it. And I guess that's what that slide is outlining. And so I have gone over the disclaimers, the stuff that I have to talk about. All right, so now let's get into the nuts and bolts of the trade setup. And as I said, the guys that are brand new, this is going to be the slide that you're going to lean on a little bit here. This will be your cheat sheet. All right. Another thing, this is live, so if my phone starts buzzing, I might have to put you on hold and hit the mute button so I can maybe take some orders, okay? But in the meantime, let's get our hands dirty and get going here. The first order of business is the time frame, okay? Michael is on a 4-tick range chart, okay? So in the training room, okay, you're going to see 4 or 5 different charts that are floating up in the air. I just have one for simplicity, okay? Just real simple. So you're going to get on a 4-tick range chart. So chances are you're on a time-based chart. You might be on a daily. If you're following logic, you're on a 30-minute chart. You might even be on a 5-minute chart. The idea is to get down to the 4-tick range chart. So what you do is next to the timetable, the time frame here, there's a little drop-down box. If you left-click on that and go down to Custom, select a range bar and make that one look like a 4. And what you're staring at now is the S&P E-mini on a 4-tick range chart. Okay? The first trap that people fall into a lot of times, so go down to Custom, select tick bar, and make that 2 look like a 4. If you're staring at this is dead wrong. It's a common mistake that people fall into, but the idea is to get to the 4-tick range. And the little tip really is this R in parentheses. Okay, that'll let you know you're on the range bar. Okay, and what's significant about the range bar is that the height of each candle is 4 ticks in height. Some look smaller, bigger, but in the end, they're all the same height. Okay, so why is that important? In the room, you're going to hear, on occasion, you're going to hear Michael start calling out the highs and the lows of then the current candle. Okay, the highs and the lows of then the current candle. What he's doing, he's preparing himself to place an order in advance. Okay, he's either going to place it a buy stop above the market if he's looking for something to go higher, if he has a bullish scenario, or if he's going to place an order below the market. Okay, if he has a bearish scenario. Okay, so if the current market price is here, he's going to be buying it on a stop, or he's going to be selling it on a stop. So if the market takes off, he's going up with it. If the market falls out of bed, he's going down with it. Okay, so that's what he's doing. Okay, so I'm just letting you know when you start hearing that in the background, he's preparing himself, and he's going to be entering. He's placing an order is what he's doing. Okay, that's what he's doing. Okay, If that presents itself this afternoon, I'll show you how to do that, okay? But the fact that he knows that the height of each candle is 4 ticks, he can be a little bit proactive in placing the order, a little bit predictive, okay? So that's the point of the 4-tick range chart, okay? And I want you, when you're in the room and on the trial, start thinking about that. Oh yeah, that's something that Bert talked about. He's calling the highs and lows. I'm not sure why he's doing that, and he just got into this market. How did he do that? That's what he did. He placed the buy stop and he placed the sell stop. That's how he did the magic. Okay. Okay. So we're on the time frame. We're on a 4-tick range, right? So let's get back to our little cheat sheet and let's talk about the top portion of the chart. Okay. Okay. So we're keeping an eye on price action. All right. Some buzzwords here. The blue and red line is referred to as the MA1. Okay. Nothing's fancy about it, just MA1. The green line, it's called the BBC. That is short for bullish, bearish cross. Bullish or bearish cross. Together, they make up step number 1, okay, which is this. If the MA1 crosses the BBC and the MA1 is red, that's a bearish cross. If the MA1 is blue and crosses the BBC, well, that's a bullish cross. So the one that's highlighted here is a bearish cross, okay? That means from this point forward, you're looking for an opportunity to go short. Again, you're looking for an opportunity to go short. Remember, I didn't say go short, go long, go short. You're looking for an opportunity because that leads us into step number 2, which is this. After the cross, the normal thing for the market to do is to, after the cross, is to gravitate toward that green line or the BBC. That's the normal thing. You're looking for the normal thing. You're looking for the candles to get up to the green line, touch it, but then close in the direction of the trend. Okay? The arrow, or the one that's outlined, is a down close after a touch of the BBC. That is step number 2. Okay? That's what you're looking for. Why? Because that's normal. All right. Now, we know the markets aren't normal, right? So here's what happens. Sometimes you get the market to gravitate toward that BBC. It doesn't quite get there, and then it goes down. Okay? There's one good example of it right there. There's another example where it gets close, and then it starts heading down. All right? What I'm going to teach you, and what you'll see in the training room, is you're going to see Michael as it's flagging toward that green line or the BBC. You're going to see him drawing trend lines. That is a good habit for you to get into. Get in the habit of drawing a trend line. I'm going to show you how to do that. But I'm telling you ahead of time that after the cross, okay, you're looking for the market to do step number 2, which is gravitate toward the BBC. In that process, you're going to be drawing a trend line, because if it doesn't get there and the short does qualify, you're going to take action. Okay, you're going to get inside that DOM and push a button. Okay, again, if it starts grabbing toward the BBC and with the setups in play, you're going to take action. Okay, so you're going to see a lot of trend lines being drawn in the training room, and there's good reason for that. Okay, you're preparing yourself ahead of time to take action if that happens. Okay, all right. So we have step 1, which is the bearish cross. And it's a bearish cross because the MA1 is red. The market did the normal thing. It touched the BBC, but then closed in the direction of the trend. So we have a red candle. So we have step number 1 and 2. So after step number 2 is in play, our eyes gravitate toward the oscillator portion of the chart, which is called the slingshot. Okay, I'll tell you, the trade exists down in the slingshot, and I'm going to show you why, but I'm going to break it down for you so you can understand what's going on down below. Okay. So this red and blue line here is referred to as the cycle. Okay. The green line, well, nothing fancy about it, it's just the green line. But here's the scoop on it. Get my pen out here. What the cycle is telling you is this. The fact that it's red and it's got a nice slope to it, it's saying that NASDAQ on a 4-tick range chart, okay, is bearish right now. The momentum is bearish. The red line is telling us, okay, it's got bearish momentum. Okay. The price action, okay, combined with the green line together, okay, is suggesting that this isn't, and which is normal, right? We expect the normal thing. The normal thing is happening. And the fact that the green line is pulling away from the cycle, like a slingshot, right? When you pull the rubber band back, okay, that's where the slingshot, the name of that came from, okay? This is suggesting this is just a pullback in this ongoing downtrend, okay? So once we get the bearish cross, step number one, okay, that activates our senses, hey, we're looking for a shorting opportunity. We look for the normal thing, the market to pull back to the BBC, and if we get a red cycle, okay, along with the green line pulling away, this separation that's outlined below, okay, this yellow arrow, this space in between the green line and the cycle is the divergence or the separation that Michael was talking about in the room, okay? Saying, hey, we get this pullback with the down close. Step 1, 2, and 3 are in order, okay? There's nothing left to do but push a button and take action, okay? And after we take action, then it's just money management, okay? And I'll show you what that is. But in the end, what you expect to happen is this. Down in the slingshot, you expect this green line to pull away from the cycle. And then ultimately, that green line will get into and touch the cycle. And in doing so, okay, the market's going to make a new pivot low. And it's at this point, you get the heck out of Dodge. This is where you're closing out the trade, okay? So you expect a new pivot low, okay, when the green line gets into the cycle. Because what you expect to happen after this, okay, and this is why the trade exists down in the slingshot. You expect the green line to get into the cycle, pull away. Into the cycle, pull away, until that momentum turns bullish. So now the market should be heading up. So then you want the green line to pull away from the bullish cycle, and then you're looking for the separation underneath it. So what you end up doing is, right, selling this top, selling this top, selling this top, buying this dip, buying this dip. And every time it gets into the cycle, you're going to close it out. That's it. That's the game plan. So that's why the trade exists down in the slingshot. Okay. The cycle is telling us whether we have bearish or bullish momentum, right? The green line pulling away, again, with a price action above, are the extra clues to say, hey, maybe that's what's happening. That's that little air pocket in this ongoing trend down or up. Okay, so that's a game plan. Furthermore, I'll say this, just from observation. When we have a red MA1, we have a red candle, and we have a red cycle, and even when that MA1 is red, in this example it's blue, when everything is all the same color, it stacks all the probabilities in your corner. Okay? No, it's not 100%. Nothing never is, but you should get excited when you see that. Okay? I'd also add, when the cycle has a nice slope to it, at a 45-degree angle, that means you have the wind to your back. That should also get you excited. Okay? So consider that point too. All in all, okay, behind every trade, there's an 8-tick stop attached to it. Okay? So what does that mean if I'm brand new? If you're trading the gold and the crude, you're risking 80 bucks a contract if you're dead wrong. Okay, if it's the S&P, it's closer to $100. If you're trading the YM or the Euro, I think it's closer to 40 bucks. Okay, plus or minus the commission and fees that you pay. All right. So if you're dead wrong, that's what the risk per trade is. Okay. So in the end, here's what you're signing up for. Okay, when you take the trial, you're not learning to pick the top, and you're not learning to pick the bottom. You're not going to learn to trade it from point A to point Z. What you're learning to do is take a piece out of the middle, as I talked about earlier. And along the way, you're going to trail the stop, trail the stop, trail the stop, trail the stop, until that green line pulls away from the cycle and then ultimately closes the gap. And when it closes the gap, you're taking your profit. Okay? You're on a 4-tick range chart. So you're looking at the market under a microscope. So you have to be in front of the screens. You have to be engaged in the market. All right? So there's no walking away. Okay? You're going to be glued to the screen for a little bit. Okay? You have to be in front of the screen all day? No. But when you're there, you have to be, you have to be ready to roll. Okay? You're going to have to be efficient in placing orders. Okay? The tower here, Michael's going to bring up his DOM, okay, inside the training room. So you're going to have to learn to buy and sell in here. Okay? That's what the demo is for. Okay? Practicing, pushing the buttons. No, it's not the same. It's not real dough, right? We know that. The emotions aren't the same. But the transaction and the taking action part of it is a big deal. Okay? Especially in a fast environment. All right? So I'm going to show you how to do that. All right? All right. So that's the trade setup in a nutshell. Okay? So let me do that. All right, so now we're going to hang out. Now we're going to look at the market under in a live environment. So you are staring at the DtPro platform. Okay? Notice on a 4-tick range chart, so we've checked that box. Okay? What we're going to do is we're going to look for the same setup. Okay? Now, before we start, before we push any buttons or take action, the number one thing, what the market must be doing before we take any action, is the market must be trending. We should be making lower lows, okay, or we should be making higher highs, okay. That is one of the biggest, basically one of the biggest traps that people fall into. They get caught in this sideways action, they don't even know it, okay. So here's a solution to it, okay. Let me get rid of it. Get my drawing to all. Here's how I would tell you to do it, okay? In the training room, you're going to see 3 or 4 different charts that are floating, okay? They're Michael's charts, okay? They're blowing up pretty good, okay? Like, for example, you're staring at something right now, okay? We have the bullish cross here. The MA1 is blue and crossing the BBC. It actually draw a trend line off the tops, right? All right. We did touch the BBC, and we do have an up close. We're lacking some divergence here, right? We don't have that green line underneath it. What people have a tendency to do is they look at the market under a too fine of a microscope. But if you just take a moment to zoom out a little bit, the bigger picture is actually telling you we're sideways. All right, we're just going back and forth here. You don't know it because you're looking at the market, you know, under a bigger picture like this. Okay, so you get caught in a sideways market you don't even know. Okay, so number one, are we trending? That's the first thing we ask ourselves. Your next order of business is to hit the zoom out button. Okay, are we making higher highs or are we making lower lows? If we're not, don't push a button. If you're not sure, don't push a button. Okay, if you're wondering if we are and you're staring at the screen like we are now going, I'm not sure. Well, here's a clue. These red and green dynamic support and resistance dots are actually a good clue. If they're running side by side like they are now, it's a good chance we're sideways. Okay? So if you're not sure, look for the dynamic support and resistance dots and see if they offer you any clues. All right? So for the moment, I wouldn't really get excited about the ES until we took out this high here, or if you're really aggressive, we'd have to really take out dynamic resistance. These are those red dots before I would entertain getting long. Okay, so in my opinion, the ES is in the sideways market for now. Okay, and I wouldn't touch it. So I would look for something a little bit more easy and obvious. All right, so let's go to gold. Again, another market, to me, at first glance, looks sideways. But to go through the motions, zoom out, zoom out, zoom out. Top here, dynamic resistance here, support, support, dynamic resistance, printing there. Check the boxes. Look, we're sideways. Okay? So right now on the gold, I wouldn't touch a thing. All right? Again, get in the habit of hitting the zoom out button, and that'll help you decide whether, you know, we're trending or not. And if you're not sure, don't push any buttons. Okay? But again, if you blow it up like this, okay, you have a bullish cross here. You do have that pullback to the BBC with the up close, and it's just a hot mess right now. And the reason is we're sideways, along with some other things. But we're talking about trending markets. This one isn't trending right now. Let's move on to the next one. Look at crude oil. Zoom out, zoom out, zoom out. All right. So turns out we have kind of the same thing here, but here's what's a little bit different. There's something to talk about. Okay. Good. Okay, that's concerning, right? Top here with a top here, dynamic resistance are side by side. Okay. But here's my point. We had some dynamic resistance printing here. Okay. And we finally got over that dynamic resistance. We spent a little bit of time above it, right? So, like I said, that's usually an indication we might be trending. We might be starting to move back up, okay? So here's that bullish cross. The MA1 is blue and crossing the BBC. That's step number one. The normal thing for the market to do is to pull back to the BBC, right? The BBC is this green line. Here's a touch and a close. All right. The cycle is blue, and the green line is pulling away. So we have some separation, right? So that's that separation or the divergence that I was talking about. Okay. What do we expect to happen? We expect the green line to get into the cycle, and at the same time, the market should make a new pivot high, right? And that's at this point, we cut the trade loose. So this is where we would get out, okay? So my point is, look at dynamic resistance or support, and if we end up breaking it, that's usually a good sign that the trend is starting to continue again, all right? So just consider that, all right? Now, as I said, a good habit to get into after the cross, which is here, is to activate that trend line. And the way you do that is you just left click on the trend line and you start drawing. Okay? You start drawing. I don't know why this is sticking. Okay? If you have wicks, use the wicks. If you have a wick and then just a body, use the corner of the body. That's how you draw it. Okay? This would be an up close. This would also be a up close. Okay? So there's several up closes there with the bullish divergence in play. All right. So let's look for something for realsies, not after the fact, so we can get our hands dirty. Let's go to natural gas. I know that one's moving. Okay. Zoom out, zoom out, zoom out. We've broken dynamic resistance, right? All right. The normal thing for the market to do, pull back to the BBC. In the process, we draw a trend line. Okay. We have the separation. We do. The cycle is blue, and the green line is pulling away. So if we get an up close, we will try to get long the natural gas, believe it or not. Okay. So here again, this is how Michael is going to be predictive or proactive. If the low is 26, 24, 262.40, if you add 4, 1, get a marker out here, 1, 2, 3, 4, that should define the 4-tick range. So 262.90 is the order to get long. That is the order I have in there to get long the natural gas. Will 262.90 be above the trend line? It will. That's a good sign. Is the trend line required? The trend line is not required because the cycle is blue. Okay. So that's a good thing. We have that going for us. Okay. So let me add one thing since I've already have the order placed. Let me show you this little feature on the DOM. So this little Tinker Toy triangle up here. When I left click, notice how the bottom of the DOM opens up and closes. Okay. It's called a bracket order. Okay. If I select sell stop and buy stop, and I right click over the properties and hit factor in ticks, make that large number look like an 8, make that large number look like an 8. What that will do, that will place, oops, when I try to get long, which is at 262.90, that will automatically put an 8-tick stop. behind it. Okay, it's right there. There's my stop loss. Okay, so if this gets tripped, I'll have an 8-tick stop behind it. Why? That's what the rules say. Every trade has an 8-tick stop attached to it. Okay, so what we've created is a bracket option. Okay, let me get over here. So that's what we've created. All right, so we're set. If this market closes higher, okay, if we get a green candle up, we'll get long. Okay, and then we'll manage the trade. But notice a few things. We have the bullish cross, that's step number one. We have crossed over the dynamic resistance, so that gives us some comfort that we're actually trying to go higher. So that means we're trending. We have a blue cycle. That's good for the home team. The green line is pulling away, so we have that separation. The MA1 is blue, so all the colors are the same. So that is putting all the probabilities in our corner in this one. Okay, so all we're looking for is the up close. Okay, we're looking for a green candle. That candle has not closed, so that's what we're waiting for. That is the reason why we have the order up here. Because if it goes to 262.90, it's going to print. That'll be 5 ticks. That means the fourth candle will be complete. We'll have the close, and it'll start printing a new candle. That lets me know, hey, we have an up close. So basically the magic formula is just take whatever the high or the low is and add or subtract 5. And that's the number you click on. Okay? So for example, over it again. If the low is 262.40, add 5, right click. That's the order that we're getting long at right there. All right? So instead of watching the natural gas trade back and forth here, I'll come back to that, but let's find something else. Okay, so we have a bearish cross here in the crude. Would you guys agree? The MA1 is red and crossing the BBC. I like the slope of the cycle. It's red. It's got a nice slope to it, right? Zoom out, zoom out, zoom out. Are we trending? We do have a lower low here. Okay, just barely. Okay, my concern is if I zoom out, we have a little bit of congestion here. So I don't know if it's quite that easy and obvious. When I say congestion, okay, I see bigger picture, I see this, okay, but I see a lot of in between here. So I'm not sure if that one's really trending. If I'm not sure, I'm just not going to do anything, right? And that's my advice to you. We'll come back to that one. Checking our natural gas, okay. Let's go to the gold. Still in the trend, still sideways. That's why we don't touch it. Let's go to the currencies. Okay, so here's a good example. We were trading sideways here. Okay, we were trending here nicely. Then we got into this little chop. And we broke out of the chop. So now we're starting to trend. Okay. Not only that, look at this. Blow it up now. We actually broke dynamic support, right? So draw a trend line because we don't know if it'll get to the BBC. Here's a short right here. Okay. The cycle is red, right? We have the divergence. So, in fact, where are we at? Let's do it. Let's get in there. Okay. Now, What I just did is I left clicked in the red to get short. Here's our stop behind it. Okay. I did that because a lot of it, it's all there. Okay. The setup's there. So let's see what happens. Okay. Normally, I would tell you guys this. Okay. It went 4 ticks. I don't know if that is 4 ticks. Did it go 4 ticks? Yeah, it went 4 ticks and our stop would be at break even. But this is a good time for me to show you how to get inside the DOM, get short. Okay. How do you know if I'm short? Well, this big red line in the middle of the chart will tell you. Right here will also tell you. Positions at top of the DOM will tell you, and your P&L's moving. Okay. There's about 4 little areas that tell you, look, dude, you're short. Okay, whether you like it or not. Okay, and remember, our stop loss is right here. Okay, that's our stop loss. Now, this is going to give me a chance to show you how to manage the trade and move the stop loss at the same time. Okay, so watch this. Here's our stop loss, right? The way to move it is if you put your mouse over the number 1, left click on the mouse, hold it down and drag it, release it. You can move your stop. That's all Michael's doing. He's placing some additional orders, but to keep it simple, okay, you left click over it, drag, release, it's going to move the stop. Okay. What I would also do is if you go up to trading, go to position and order management, hit working. Okay. Notice our natural gas orders are working, but here's our buy stop in the euro. It is right here. And as I move it, notice how that moves. This box you should always have open or hidden or somewhere you can grab access to it, because this is going to let you know if you have any outstanding orders working. Okay. So I would get in the habit of having that box open. Okay. Now the rules of engagement are, once you get short or you get long, when you get into the market, if the market goes plus 4 ticks in our favor, 1, 2, 3, 4. If the euro gets to 111.73, we're going to move the stop to our entry. We're going to move it to break even. That is the game plan. Doesn't matter if you're trading the ES, the gold, the crude, the natural gas. If the market gets plus 4 ticks in your favor, you're going to move the stop to your entry, period. The other rule is, if it closes on the other side of the MA1, okay, you're also going to move the stop to your entry. Okay? So that's all we're waiting for at this point. We're short the euro because it's all over the DOM here. And we did it because we had a bearish cross. We broke some dynamic support, which are the green dots. We drew a trend line. We had a close below the trend line. We did that because it didn't quite get to the BBC. We have a red cycle. We have a red MA1. And we have separation. We have all the ingredients for it to go down. Okay? So what do we expect to happen? We expect the green line to pull away and then ultimately get into the cycle. The cycle with time will do one of these. And then the market should make a new pivot low, and when these two combine, we get the heck out of Dodge, take our dough. Okay? So now we're just sitting. Okay? We're sitting and waiting for the market to get to 73 so we can take our risk off the table. Okay? So let's see if that happens. In the meantime, let's go check on our natural gas. Did it qualify? I know it didn't get filled. We had the up close. Okay, there is the up close against the BBC. Okay, so in the natural gas. We just got long. Okay, several areas on the DOM. Well, this one I didn't show our P&L, but we have the position open. It's shown here, and it's shown on the chart. Okay, here's our stop loss right here. Get the marker out. So if it goes 1, 2, 3, 4, if it goes to 263.20, we will move the stop right here to our entry. Will 263.20 be above the MA1? It will. And that'll be another reason to move the stop up. So what I will do is I will set an alarm there, right there, in case that trips. Okay, let's go check on the euro. Okay, so we shorted it at 75. It's at 74. It hasn't quite down to 73. It's almost there. We can move the stop to our entry. Okay. I'm going to put an alarm in there. The little bell there is an alarm that says, hey, move the stop down, dude. Okay, let's see. Hope it moves down just a shade so I can move it down. I can show you how to do it. In fact, all right, so my alarm went off. So we're 4 ticks in our favor. I left click over the number 1, drag it down to our entry. Okay, that's it. Our new stop is at our entry. It's right here, 111.75. Okay, see what happens. Now let's go check on the euro. Just waiting for that to start moving. All right, so let's see. If I can. You guys see that? It's a webcam. Bart, can you see it? All right, so anyways, okay. So anyways, yeah, I've never used it, so here it is. Yeah, that's who I am. So the idea is, how did I take that down? Oh, there it is. All right, so that's what we're doing. So we're just waiting for the market to break down a little bit. So now what we expect to happen is this green line to ultimately get into the cycle, and hopefully the euro makes a new low. Okay, so that's what we're doing. So I'm going to erase that, and I'm going to switch guns. And go to our natural gas. So we're just waiting for the natural gas to fire again. All right. So let's, oh, it's starting to move here a little bit, right? So I have an alarm in at 263.20. Okay, if that trips, okay, I'll move the stop up. Okay. So you guys understand why we did that, okay? So we had the bullish cross. Okay. We expect the normal thing to happen. Meantime, we draw a trend line because we never know if it'll get there. Okay. It does in this example, and we also get the up close. So it was kind of cool. We got everything there. So now we're just waiting for that to move. Okay, she's starting to break down. So let's do this. Let's move this. It's like 1 tick in front of us, okay? In fact, yeah, we'll go 2 ticks. So we're going to move our stop loss 2 ticks in front of our entry. Okay. Natural gas. Okay, it wouldn't quite get the 4 ticks, but we're looking for the up close there. Then we can move our stop up. All right. That's not. All right, so our stop got hit in the. Let's get rid of these guys here. All right, so our euro got tripped. Okay, so now we made 2 ticks, nothing to shake a stick at. Okay, so then we're hooked on the natural gas, which is just kind of laboring here. So let's go somewhere else and let's try to go to the gold. Okay, again, we have the bearish cross. We're lacking the divergence. We have a little bit of support here, so I don't think anything's going to fire there. The euro, okay, just talked about. Check on the indices and see how they're doing here. Notice the first thing I do is zoom out, zoom out, zoom out. Okay, we did finally break some dynamic support, so that's going to give us a hint that maybe we're trending down. Okay, so maybe we can blow this up and talk about this a little bit. We draw a trend line because we don't know if we'll get to the BBC. We definitely get through the BBC and some. And here's our down close, right? Right here. A few things that stick out right away. Okay. Number one, down close. 2 things. The black step line. Okay, so there's a disqualifier there, right? Guys that are CFRN members. When the black step line gets into the cycle, that's disqualifier number 2. Okay. The first one is we're not trending, right? Number 2 is black step line breaks the BBC. We're not pushing any buttons at that point. Okay. Here's the other one right here. There's a big trap that people fall into. Okay. We get the down close, and all of a sudden, this is good for the home team, right? All of a sudden, it's turned blue. But not only has it turned blue, it's curled up, and now it's got a 45-degree angle to it. Okay. Here is the third disqualifier. Okay. The reason why we draw the trend line is, number one, we never know if it'll get to the BBC. Here's a good example of that here. Right? Right here. But the other reason why we do it, draw it, is because if we get the down close and the cycle turns color on us, the trend line is required. You have to draw it, and then we'll have to get a close below the trend line before we can take any action on it. Okay? But not only that, take it a step further. If she starts curling up at a 45-degree angle, no go. No trade. Don't push any buttons. Okay? We just talked about it earlier, right? This guy is telling us momentum's up, momentum's down, this one's up. If they have a good slope to it, right, and we're in the direction of the trend, we get excited about it. We certainly don't get excited about it if we're swimming against the tide. It's got a different color. That's not good. Okay? So that's the reason why we don't challenge it. Okay? That's why we don't even attempt to put a trade on. If it's flat, okay, that's fair game. Okay? But I just want you to note, especially if you're brand new, this guy turns the color on you. Number one, it's watering down the probabilities. But number 2, if she starts curling up, man, don't touch it. Okay? Don't touch it. All right. So let's get rid of these trend lines. Natural gas is laboring, so let's have to sit. Okay, went 3 ticks in our favor, but that's not enough to move the stop up. So rules of engagement are, right, we have to close on the other side of the MA1 or 4 ticks in our favor to move the stop. Okay, So we're not doing anything right now. That should be a little bit of a concern, but we do have the separation. We'll see. Like I said, not all of them are going to be winners, but they had all the variables to it. All right. Were we just talking about the ES? Yeah. So the ES. Back to the ES. We're back in that sideways chop. Okay, so nothing to do. British pound. Zoom out, zoom out. That's an easy and obvious one, right? Back and forth between the support and resistance dots. Not trending. Swiss franc. Same thing. Aussie dollar. Possibly. Possibly something in the Mexican peso. And the Japanese yen seems to be sideways. All right. I'll just check on the gold because, well, that's what we do. Again, if we're drawing the trend line, your trend line in the gold should look like this. Okay. Bottom of the wick, corner of the body, straight up. Okay. Here's an example, okay, where the trend line is required. The trend line is required because now the cycle has turned blue. And we just got stopped out of nat gas. Okay. So there's the blue cycle. Okay. So that tells you two things. Number one, probability is watered down. Okay. And number two, you're going to have to get a close below this trend line before we could take action. And if she starts curling up, which she kind of is looking like she wants to do, that's going to be a disqualifier. And it's 2 o'clock already. All right. Get rid of this trend line. All right. So it's 2 o'clock. So here's the deal. I'll shut it down. We got a chance to look at a few markets. We looked at the euro. We looked at the natural gas. Okay. A few takeaways. Number one, if you're brand new, lean on the syllabus. Okay, the cheat sheet. That's the same thing that Michael's doing in the training room, just in 4th gear. Okay. He's in there for 2 hours a day trying to get a goal. So that's why things are moving quickly. Okay. If you're spinning your wheels, okay, the traps to consider: sideways market, solution, zoom out, zoom out, zoom out. And when in doubt, stay out if you're not sure. You're not sure if we're trending, lean on the dynamic support and resistance dots. Okay. If we break them, okay, then you can consider it. Okay. That should give you a little bit of confidence. The cycle color, right? There was an example back here where we had the down close after breaking dynamic support, right? But then the cycle turned a different color on us, but not only that, it had a 45-degree angle against us. That's usually a disqualifier. That is a disqualifier, but the action you usually get are stop outs, or you just get some sideways chop, and a lot of times you might get some reaction down. You move your stop to break even and you get stopped out anyways. Okay, just from observation. Unfortunately, a few times if you get this and you get a reaction down, you're like, yeah, I got it. I got this one. It was just luck because this was actually going against you. What happens is you'll take the next one and the next one and the next one, and then you kind of got suckered into the trap. Just didn't even realize it. Okay. And ideally, you want to look at everything is the same color. That's when it puts all the probabilities in our corner. Here's one, in my opinion, that had everything going for it. It just didn't work out. Okay. So not all of them do. Let me get rid of that alarm. All right. So I'll see you guys in the training room. Okay, I'm there every morning. I'm just in the background, probably sending emails out, picking up a phone or what have you. Every Thursday for an hour, we'll just hang out, go over the same things over and over and over and over again. Okay, that's something I pound away on. I recorded this, so what I do is I decode it, and then I throw it out on YouTube. So if you want to go back and check it out, you can. Okay, so there was a demand to do this in a slow environment, so hopefully it helps. Again, if you have a question, raise your hand. Call me. You know, whatever you want to do. Exchange an email. That's fair game. Okay. So that's it. See you guys in the morning. If not, see you next Thursday.